In today's video, we're going to talk about stock tokenization and how one of the largest company in the world that most never heard of, maybe the one behind me, plan to take over the world of crypto. Let's get started. But before we get started, thank you for watching. We're still a small YouTube channel. Every like, comment, and subscribe make a world of difference for us. Don't hesitate to do so if you appreciate the content. And finally, before we start, I've got to tell you that this video is not meant to be financial advice. The crypto markets are extremely volatile. Enter at your own risk. What's up everyone, my name is Simon, and in today's video we're going to dig deep in a new concept that could revolutionize the world of crypto and how we invest at large. This concept is the concept of tokenized stock. Even though this is not exactly a new concept in the world of crypto blockchain, with popular exchanges such as Binance and FTX that momentarily offered the service in the past but suffered pressure from regulator. The idea seems great, but regulator want context to it, the organization that will be able to make it fit in this said legal context will be able to control what could become the biggest future feature of DeFi. And it seems like that we just have a contender for it. I name BlackRock. BlackRock just behind me. But before going deeper in the matter, let's just recap the basic, defining what is a stock and what is a token. By definition, a stock is a general term used to describe the ownership certificate of any company. A share, on the other end, refers to the stock certificate of a particular company holding. A particular company shares make you a shareholder. In finance, stock consists of all the share by which ownership of corporation or company is divided. A single share of the stock means fractional ownership of the corporation and proportion to the total number of share. To sum it up, if you own 10 shares of Tesla stock and that there's approximately 3.2 billion shares, you will own this percentage of the stocks. Now let's talk about what is a crypto token. A crypto token is a representation of an asset or interest that has been tokenized on an existing cryptocurrency blockchain. Crypto tokens generally facilitate transactions on a blockchain but can represent an investor stake in a company or serve an economic purpose. Just like legal tender, these mean tokens holder can use them to make purchase or trade, just like other securities, to make profit. Do you start to see now how all the dots start to seamlessly connect? How the fit seems so natural between stock shares and crypto token? We know it works. Binance and FTX did it. They did this experiment and it worked. The only thing that was able to stop it was not technical limitation or exploit, but the mighty hammer of regulation. So if we can peg crypto token to any currency on the planet, there is no reason we could not do the same with companies or stock shares. In April 2021, Binance launched its own version of tokenized stock, which allowed users to purchase fractions of shares in companies such as Tesla, Microsoft, and Coinbase. Binance tokenized stock was reportedly backed by actual shares, which were held by a third-party custodian. Similarly, FTX also started offering tokenized stock in October 2020, which allowed users to trade fraction of share in companies such as Amazon and Apple. However, both Binance and FTX quickly faced regulatory scrutiny over their tokenized stock offering. In April 2021, the German financial regulator BaFin issued a warning to Binance stating that its tokenized stock offering violated security rules. Additionally, the Italian regulator Consob ordered Binance to cease offering its tokenized stock product to Italian investors in the same months. Similarly, in July 2021, the U.S. Securities and Exchange Commission, the SEC, reported open an investigation into whether FTX tokenized stock offering violated security laws. The SEC investigation focused on whether its FTX tokenized stock offering was properly registered with the regulator. As a result of this regulatory pressure, both Binance and FTX eventually decided to discontinue their tokenized stock offering. When it rains, it pours. Binance suspended its tokenized stock trading in Germany, Italy, and Netherlands in May 2021, and later discontinued its tokenized stock offering altogether, sadly, because it was working fine. And FTX, well, we know what happened with FTX. We don't need to come back on that story. That hurt. And now that we're done with this lesson in economic concept, crypto history, we can have a look at today. Imagine a world where you can buy almost any stock from major exchange and have it in your crypto wallet. A world where you can invest in any economy from anywhere in the world without limit. All unlimited capitalistic opportunity and free trade with no border. Sound fantastic, right? Sadly, as of today and late March 2023, there is still no credible option, even no option at all when it comes to tokenized stock. And as we discussed earlier, for the end user, there is mostly only positive aspect. The only entity that will mostly suffer are the regulator. I personally believe that if the future is to be around crypto and blockchain, the tokenized stock are inevitable. But we need an entity that will comply with regulator, that regulator trust, and that has a financial mean to buy a bit of everything in the stock market and tokenize it in form of tokenized stock or tokenized ETF, or maybe in form of tokenized stock ETF NFTs. That's a lot of buzzword, I know. But that's where BlackRock entered the stage. BlackRock is an American multinational investment company based in New York City. Founded in 1988, they have become the world's largest asset manager with not billions but trillions in assets under management. If there is one company that rules the world, or at least the financial market, it is BlackRock. And if BlackRock take interest in the tokenized stock and the crypto market in general, it means a lot for us. So, how did BlackRock come to be part of the conversation? Well, in December 2022, BlackRock CEO Larry Fink said in an interview recently that the next generation for market, the next generation for securities will be tokenization of securities. Even earlier, on its annual letter published to BlackRock Investor in March 2017 of this year, Larry Fink said that, quote, "In many emerging markets like India, Brazil, and part of Africa, we are witnessing dramatic advance in digital payment, bringing down cost and advancing financial inclusion. By contrast, many developed markets, including the US, are lagging behind in innovation, leaving the cost of payment much higher," end quote. But mostly, he also highlighted the potential of tokenization of asset class that could drive efficiency and capital's market by saying, open quote, "At BlackRock, we continue to the digital asset ecosystem," that's crypto blockchain, "especially area most relevant to our client, such as permission blockchain and tokenize of stocks and bond," end quote. He said it. blockchain and tokenization of stock and bond. So, what does it all mean for the crypto blockchain NFT sphere? I mean, that's the giant of the world are watching closely. It also means that we should not be surprised to witness the apparition of BlackRock stock or ETF market. They used to be invested heavily in FTX, but now I got the feeling that they will either start their own platform or invest somewhere else, and that we will see a Web 3.0 with brand new offering and financial product, with brand new DeFi offering. And maybe that's BlackRock that will be the first one to engage the step. And after that, we'll probably see other big player join in the chat. Well, I've got optimistic thought. Yes, I've got my hopes up. Yes. But taking in consideration that even though the bear market, we keep hearing about crypto and blockchain, these technologies are not going anywhere. The giant of the world are watching and witnessing and joining the movement. I will not be surprised to see BlackRock involvement in Web3, crypto, and DeFi get deeper in the coming years. I hope that these big players will come and establish themselves, but I also wish that they respect the decentralized and self-custody nature of Web3 and blockchain technology. That's everything for today. I hope that you appreciated this video. If you like it and or that you learned something today, don't hesitate to comment, like, and subscribe. We're still a small YouTube channel and it makes a world of difference for us. Thank you for watching and see you in another Blockchain Yeti video.